Have you ever wondered how some businesses seem to effortlessly secure funding while others struggle? What if there was a way to access capital quickly and with minimal hassle? Enter Shopify Capital, a financial solution designed specifically for Shopify merchants. But the question remains, is Shopify Capital easy to get? In this video, we'll dive deep into the world of Shopify Capital, exploring its application process, eligibility criteria, and what you can expect if you decide to pursue this funding option. By the end, you'll have a clearer understanding of whether Shopify Capital is the right fit for your business needs. Shopify Capital is a funding program offered by Shopify that provides merchants with quick access to capital. Unlike traditional loans that can take weeks or even months to process, Shopify Capital aims to deliver funds in as little as 2 business days. This speed and convenience make it an attractive option for many business owners who need immediate financial support. One of the standout features of Shopify Capital is that repayments are tied directly to your sales revenue. This means that during slower sales periods, your repayment amount decreases, easing the financial burden on your business. Additionally, there's no need to sacrifice equity in your business, as is often required with venture capital. The application process. So, how do you apply for Shopify Capital? The process is straightforward and can be broken down into a few key steps. Check eligibility. Before you can apply, you need to determine if you're eligible for funding. Shopify uses a machine learning model to analyze your store's sales data and other metrics. If you meet their criteria, you'll receive an invitation via email or through your Shopify admin dashboard. Receive an offer. If you are eligible, Shopify will extend an offer detailing how much you can borrow and the repayment terms. You'll want to review this offer carefully to ensure it aligns with your business needs. Application submission. Once you've accepted the offer, the application process begins. This involves minimal paperwork, no hard credit checks are required, and can often be completed within the platform itself. Receive funds. After submitting your application, funds are typically deposited into your bank account within a few business days. You can then use this capital to invest in your business immediately. Eligibility criteria. Now that we understand the application process, let's talk about eligibility. To qualify for Shopify Capital, certain criteria must be met. Active store. Your store must be actively hosted on the Shopify platform for at least 90 days. Sales performance, a consistent track record of revenue, is crucial. Higher sales volumes generally increase your chances of approval. Low risk profile. Shopify assesses various factors such as chargeback rates and overall financial health to determine risk levels. Location. Currently, Shopify Capital is available in countries like the United States, Canada, the United Kingdom, and Australia. If you meet these criteria and receive an offer from Shopify, it suggests that they view your business as stable and likely to succeed. What happens after application? Once you've submitted your application for funding, it enters a review process which typically takes 1 to 3 business days. During this time, Shopify's underwriting team will evaluate your financial information and sales history to confirm approval. It's important to note that just because you receive an offer does not guarantee funding. You'll still need to complete the application process and meet any additional requirements they may have. Repayment terms. Understanding repayment terms is crucial when considering any funding option. With Shopify Capital, repayments are based on a percentage of your daily sales. This means that if your sales fluctuate, say during seasonal peaks or troughs, your repayment amount will adjust accordingly. This flexible repayment structure can be particularly beneficial for small businesses that may experience inconsistent cash flow throughout the year. Pros and cons of Shopify Capital. Like any financial product, there are advantages and disadvantages to consider. Pros. Fast access to funds. Quick processing times mean you can get capital when you need it most. Flexible repayment options. Payments adjust based on sales performance. No equity sacrifice. You retain full ownership of your business. Minimal documentation required. The application process is streamlined with less paperwork compared to traditional loans. Cons. Limited availability. Not all merchants will qualify. Eligibility is based on specific criteria. Non-negotiable offers. Once an offer is made, it cannot be adjusted or negotiated. Potentially high costs. Depending on the terms offered, some merchants may find the cost of borrowing higher than traditional loans. So, is Shopify Capital easy to get? For many merchants who meet the eligibility criteria and have a solid sales history, it can indeed be a relatively straightforward process compared to traditional financing options. The speed of funding and flexible repayment terms are significant advantages that make it appealing. However, it's essential for potential applicants to carefully evaluate their own business situation before applying. Understanding both the benefits and limitations will help ensure that this funding option aligns with their long-term goals. With that said, thanks for watching, and until next time.